In this video, I'll be going over how to invest $1,000 in 2018 on the Robinhood app. But before I get into that, if you haven't checked out my channel before, I talk about investing and the stock market. So if you are interested in that, definitely head over to my channel, Investing Potentials, and consider subscribing. But other than that, getting into the video, as you can see, I have the Robinhood app pulled up right here, and I'm going to go over, let's see, 1, 2, 3, 4, 5, 6, 7 stocks and one ETF that fit nicely into $1,000 portfolio. So if you're a new investor on the Robinhood app, or if you haven't downloaded the Robinhood app but you're looking to invest on it, this portfolio would fit quite nicely and has a little bit of diversity as well as some growth potential, and also has some dividend yields and some safety factors to it as well. So overall, I would consider it a pretty decent portfolio, and it actually totals to a little bit over $1,000, totals up to $1,006. I tried to get it exactly as I could because I'm sure there's some people out there who are literally depositing in exactly $1,000. But anyways, getting into it, the first thing I'm going to talk about is an ETF, actually, not a stock. If we scroll down here, these are the ETFs I own at the bottom right here, but this one that would fit pretty nicely into a $1,000 portfolio is QQQ. And what this is, if we scroll down to the About section here, tracks a modified market cap weighted index of 100 NASDAQ listed stocks. So it basically just mirrors the NASDAQ by market cap. So so some of the biggest companies in it, I believe, are some like Microsoft, a lot of tech companies. And why I chose this over some other ones like SPY or VU or the Dow Jones Industrial, that because they all basically have, the S&P 500, NASDAQ, and Dow Jones all have ETFs that basically mirror them, and they all perform somewhat alike, but this one actually performs a little bit better. It has a relatively low expense ratio as well, around 0.2%, and according to MorningstarPortfolio.com. And as you can see, actually all the markets have been performing pretty poorly, but over the past year, up right around 23%, and over the past 5 years, up 143%. And they also have a relatively small dividend yield, about around 0.98. So this will fit nicely into a $1,000 portfolio. I personally allocate about 10 to 15% of my portfolio to ETFs, and some people do more, some people do less, some people do none at all. I think that's a good percentage around to shoot for. But just because you want a little bit of diversity in your portfolio as well as a little bit of safety. I definitely wouldn't allocate 15% to like 3 times leveraged ETFs or short ETFs or anything like that. Probably more of just ETFs that mirror a certain stock market sector or indice. But moving on to the next set of stocks, the next stock that you could consider owning in a $1,000 portfolio is not Bitcoin, actually. Didn't mean to click that. Is this one right here, Microsoft, ticker symbol MSFT. Microsoft is $88 right now, and like I said before, the markets have been going down a little bit, so these prices are a little bit than they were just even a couple days ago or a couple weeks ago. But anyways, Microsoft, very, very large company, good PE ratio, pretty solid dividend yield as well, 2.26. Market cap almost 700 billion, which is a very, very large company. They have been giving out dividends for a decent amount of time now, and overall a pretty solid tech company, probably one of the best ones out there that not only offers growth but also offers some stability, and they also have a dividend yield to go along with that. There are a lot of good growth tech stocks out there, but Microsoft is definitely one of the best ones, or what I would consider one of the best ones, for a handful of reasons, because it's also safe and definitely not going anywhere soon, considering how large of a company it is and how great of upper management strength they have. There's just a really lot of good things about Microsoft. But moving on to the next company I'll be talking about, the next one is Apple, ticker symbol AAPL, and at $156, this is the second most expensive stock you will be holding in this portfolio if you were to simply use this portfolio for your own. But Apple, very, very well-known company, probably one of the best well-known companies in the world. Almost $800 billion market cap, very, very large company. I'm pretty sure it is the largest company in the world, and They actually have a relatively small dividend yield compared to some other companies, but they have enormous room to increase their dividend, and I definitely think that they will. They have like really, really a lot of room to do it, and they actually have been, and I believe they will do so in the future, and definitely in the next 5 years or so, it should be a relatively large dividend yield. But Apple has been performing pretty well over the past couple of years or so, down quite a bit right now. Actually at a pretty good buy-in point right now, but I mean before that they were up 35, 36% on the year, down a little bit, but actually a good buy-in point. I might consider buying another share of them if I was to add a little bit more money to my portfolio, but there are some other stocks I've been looking at too. But anyways, 5-year up 140%. Apple's been performing very, very well. Similar company to Microsoft with great upper management, great overall company. They sell millions and millions of iPhones and Apple products every single year, and there's really, I could go on and on about Apple, but I'm sure you already know a lot about them. But another great stock to consider having in your portfolio. And the next stock I'll be talking about is General Motors, ticker symbol GM. And if we look how they've performed over the past couple of years or so, not a great growth stock by any means, but they do have a very, very good dividend yield at 3.71, and General Motors, obviously you can see here, pretty solid dividend yield. I guess they must have had an increase over the past couple of months or so, but very good dividend yield, really solid stock overall. Honestly, it is in the automobile manufacturing industry. If you're not like from the US and you're watching this video, or you don't know what General Motors is, pretty well-known company, I would imagine that you do. But overall, General Motors is a nice kind of blue chip dividend stock to have in your portfolio that's relatively cheap as well, and I do like General Motors a lot for a handful of reasons. One being that I feel as if they really are pushing pretty good towards certain aspects of the car industry or the automobile industry, like AI cars, electric energy cars. I think they're definitely doing very good in that sector. But anyways, moving on to the next stock I'll be talking about. The next stock, if we scroll up, actually it's right above General Motors, is Nike, ticker symbol NKE. I've talked about Nike in the past. I like them a lot overall. Nike comes out with a lot of different goods and services, a lot of basically revolving around sportswear. If we look how Nike's done over the past year, up 18%, 5 years up 152%, so very good growth. Pretty decent dividend yield, 1.32, kind of on the lower end though, but they do have room to increase that dividend yield still. Pretty solid PE ratio, and overall Nike's more in the retail industry, and they've been doing some things positively with their e-commerce and online sales that I like about them, that I kind of called out a couple months ago as well. That's why I'm up a bit on them. The next stock I'll be talking about is Starbucks, ticker symbol SBUX. Starbucks at $54, another good solid stock to fit in into a relatively small portfolio. Starbucks over the past 5 years up pretty good, pretty decent growth. The year actually in the red right now, but that is due to the stock market declining quite a bit over the past couple of days or so. So honestly, that just offers up a better buy-in point for them. I might average down a little bit on them, not that I'm down dramatically or anything, but Starbucks, if we look at their stats, pretty big company as well. Good PE ratio, good dividend yield. I like a lot of things about Starbucks. Actually, in a book I was recently reading, they actually noted some pretty cool things about Starbucks that I hadn't known before, that they basically have very, very good managing technique, and that's why they're as large as they are, and it comes from the CEO down. There was a lot of cool things I was reading and learning about them as a company, because obviously if I invest in a company, I like to learn more about them. But Starbucks, very good company overall, and great fit into that portfolio. The next company I'll be talking about, or the stock I'll be talking about, is AbbVie, ticker symbol ABBV. AbbVie has been having some great growth over the past couple of months or so, and really over the past year, up 92%, and before this little dip, they're up over 100%. 5 year up 271%, and if we scroll down to their stats down here, pretty large company as well, 177 billion market cap, good PE ratio, good dividend yield, very good dividend yield actually, and they are a biopharmaceutical company. It may not be a company you have actually heard of before, but you may have some of the products in your medicine cabinet. But AbbVie, pretty solid pharmaceutical company. They have a good dividend yield. They're not really basing their profits or their earnings or anything like that off of like drugs in clinical stages or anything like that. They have a lot of drugs out on the market already performing very, very well, and you could look up more on them if you're interested. But the last stock I'll be talking about to top off this portfolio is Boeing, which will be your largest holding in your portfolio if you were to add them, most likely if your portfolio is kind of small. The Boeing, I believe this is actually the most expensive stock I even own in my portfolio. Not the most equity, I don't think so, but I think it's the most expensive. Boeing, very good company in its industry and sector, aerospace company. They make pretty much probably most of the airplanes you've flown in if you're flying in the U.S. All you hear about Boeing is just them creating more and more deals. Very solid company overall that continuously outshines other companies in their industry and sector. 1 year, very great growth, over 100%, and 5 year, almost 400%, which is enormous growth for a company their size, and just really a company that most people for some reason don't think is a growth stock. I'm not 100% sure why. Maybe because it's such like a pretty solid stock overall that people forget about it, but it definitely should be in the growth category considering how well it's been growing over the past year or a couple of years or so. So anyways, if you bought all those stocks, they would total up to $1,006. And once again, those stocks are QQQ, Microsoft, Apple, GM, Nike, Starbucks, AbbVie, and Boeing. But anyways, guys, that's it for the video. If you enjoyed the video, leave a like and comment below what you think about this portfolio and if there are any other stocks that you could possibly add that would fit nicely into $1,000 portfolio. But other than that, guys, thanks for watching the video. I hope you enjoyed.